Welcome. You've joined us for another deep dive, and today we're setting our sights on Railay Beach in Krabi, Thailand. Truly spectacular place.
Absolutely stunning, yeah.
And it's not just, beautiful pictures. We're looking at some source material, mainly a recent blog post, that suggests it's got real potential for property investment, too.
Right, and this particular post comes from Ocean Worldwide. They're a luxury real estate agency, actually based over in Phuket. That's Phuket, pronounced Phuket,
Okay, got it. And they've been around a while.
since 2004. Yeah,
Yeah.
focused on the high-end stuff in Phuket and Koh Samui. So their perspective on Krabi is, well, it's interesting.
Okay. And the director there, Sandra O'Neill, she has quite a bit of experience in the region helping investors.
That's right. Years of it, apparently helping loads of families and investors. So the goal for us today, for you listening, is really to pull out the key insights from this. Whether you're thinking vacation home, rental property, maybe something longer term.
Okay, let's dive in then. Why Krabi overall? The Ocean Worldwide post flags a few things. First up, tourism growth. It seems pretty consistent. For you, the listener, what does that actually mean in practice?
Well, it's not just more tourists, it's the type of tourism.
Yeah.
The post sort of hints that Krabi's got this year-round appeal.
Ah, okay, not just a 3-month peak season.
Exactly. So for you, that could mean potentially steadier rental income, maybe more reliable yields rather than just a big burst and then nothing. A smoother ride, financially speaking.
That makes sense. The post also touches on Thai government incentives for foreign property owners. Sounds good on paper, but where should you, our listener, actually look to find out about these?
Yeah, that's a really important point. The post is right. These incentives exist, but you absolutely have to dig into the current details. Policies change, right? So don't just take the general statement. You need to look for the specific incentives available now for foreigners in Krabi. Official government websites, maybe talking to a lawyer who specializes in Thai property law. That's where you'll get the real up-to-date info.
Good advice. And the third point was affordability. Krabi's apparently, well, cheaper than some other Thai hotspots. What's the advantage there for you as a potential buyer?
Well, affordability, as the Ocean Worldwide piece notes, isn't just about the sticker price. Think about it. If your entry cost is lower in Krabi compared to, say, prime spots in Phuket, where Ocean Worldwide usually operates,
Right.
your money could go further. Maybe you get a bigger place, or perhaps even spread your investment across a couple of smaller units. It gives you options, potentially helps you diversify right from the start.
Okay, interesting. Let's narrow down now to the specific types of property investment in Krabi. The blog post mentions quite a range. What are the main categories you should be aware of?
Yeah, the variety is pretty striking. The post covers, everything from compact condos right up to these huge villas, and even just buying land to develop later.
So something for different budgets and goals.
Exactly. It means for you, there's likely an option whether you're just starting out with maybe a condo or if you're aiming higher with a luxury villa. Krabi seems to offer that flexibility.
Let's talk about those luxury villas and resorts. The post says high demand, good potential yields. What are the high-end tourists actually looking for? Especially thinking about Ocean Worldwide's background in luxury markets like Phuket.
Well, drawing from that kind of luxury expertise, it really boils down to exclusivity and service. Think privacy, amazing private pools, maybe stunning views, definitely top-notch service.
Right, the whole package?
Yeah. People paying top dollar for a villa in Railay want that feeling of a really special, pampered escape. So if you invest in that segment, you're tapping into that desire, which is why you can potentially command those higher rental rates, especially in peak season.
Okay. Then there are condos, mentioned as more affordable, easier to manage. If you're looking for steady income without too much work, what's the appeal?
It's really the convenience factor. Like the post says, lots of these condos come furnished, often have management services right there, pools, gyms.
Less hassle for the owner.
Definitely. It takes a lot of the day-to-day management off your plate. And that attracts renters, too. People who want a comfortable base with amenities but don't want the upkeep of a whole house. It's a more hands-off way to potentially get rental income flowing.
The blog post also mentions different timelines, short-term rentals versus long-term investment, and even eco-friendly options in land. Should you be considering those too?
Well, it really depends on your strategy, and your risk appetite. Short-term lets can maybe bring in cash quicker, riding the tourist wave. Long-term is often more about the property hopefully appreciating in value over time.
And the eco-friendly angle.
That's interesting. It taps into a growing trend, right? People are more aware. So an eco property might attract a certain type of renter or buyer. Land, though, that's the most flexible, but probably the highest risk. Needs a lot more local knowledge, understanding regulations, different paths for different investors.
Okay, the post then zooms out a bit to look at popular areas in Krabi, because Railay isn't the only option. It briefly compares Ao Nang, Klong Wang, and Railay. What's the quick picture of Ao Nang and Klong Wang for you, the listener?
Yeah, the post gives a decent overview. Anong is painted as the busy hub, beaches, loads of restaurants, nightlife.
So, lots of tourist traffic.
Potentially, yeah.
Yeah.
Good for vacation rentals, maybe, but like the post notes, it can get crowded. Klong Wong, on the other hand, is framed as quieter, more laid back, luxury resorts, calmer beaches.
Suggesting maybe a different kind of tourist? Higher end?
Could be.
Hmm.
Potentially higher value rentals, maybe targeting those seeking tranquility, but perhaps the occupancy isn't as consistently high as busy Yaonang. Trade-offs.
So how does Railay Beach fit in, given its unique character? And maybe Ocean Worldwide's focus on unique spots?
Rayleigh Spedal, as the post highlights. That boat-only access makes it feel secluded, exclusive almost. Big draw for rock climbers, nature lovers.
Right, it has a specific niche.
Definitely. So investment there is probably geared towards, unique villas, maybe boutique hotels. It caters to people seeking that natural beauty and privacy. But that boat access is a key thing for you to consider logistics for you. For renters, it adds a layer of complexity.
So it really sounds like choosing the location comes down to who you are trying to reach. Your target renter or buyer is key.
Absolutely spot on. The blog post really hammers this home. You need a clear idea of who you want to attract. Onang's vibe is different from Klong Wang's, which is different again from Rayleigh's. Matching your property to your target market is vital for success.
The post circles back then to property types again. We mentioned condos and villas, but it also flagged eco-friendly developments again. What's the significance of that trend for you?
It's becoming more mainstream, I think.
Yeah.
The Post notes this demand for sustainable materials, solar power, rainwater harvesting, things like that.
So it's not just a niche anymore.
It seems less so. For you, investing in eco-friendly could align with your own values, sure, but it might also just be smart business. It could attract a growing group of eco-conscious tourists and residents, potentially making your property more desirable long-term.
Okay, let's get practical. Factors to consider before you invest, especially in Railay. The post stresses market research. What does that actually involve doing?
Yeah, crucial point. It's more than just scrolling through listings. You need to analyze, what types of properties are actually in demand in Railay right now. What kind of rental yields are similar places getting?
Checking the competition.
Exactly. And are there any big development plans for the area? New roads, resorts, that could affect things. The Post suggests checking local property websites, maybe even talking to people who live or work there. Get the ground truth.
Makes sense. The Post also strongly advises working with local agents. How do they help you, especially if you're new to the area?
Oh, a good local agent is invaluable, just as the Post says. They know the Rayleigh market inside out. They might know about properties that aren't even advertised publicly.
Ah, off-market opportunities.
Potentially. Plus, they understand local negotiation customs. They can guide you through all the paperwork, the legal stuff. It just smooths the whole process, especially navigating unfamiliar territory.
And the final factor mentioned is understanding risks versus rewards. What specific risks should you be thinking about for Railay?
Well, the rewards are clear potential rental income, the property value hopefully going up, but the risks. The blog flags things like currency fluctuations. That's a big one if you're investing from overseas.
Yeah, exchange rates can bite.
They can. Also, changes in tourism patterns. What if the type of tourist visiting Railay shifts? And just general property stuff, maintenance costs popping up unexpectedly. For Railay specifically, that boat access adds another layer of potential costs or challenges there. The Post wisely suggests diversifying your investments overall, which helps manage some of that risk.
Okay, let's talk money. Financing the investment. The blog post mentions a few routes: local bank mortgages, using savings, partnership investments. What are the key things to weigh up for each?
For mortgages from Thai banks, a Post gives a decent summary. They might lend up to, say, 70%, but terms and rates vary. So the key takeaway for you is shop around, compare offers, be ready with all the documents they'll ask for.
And using savings.
Obvious advantage, no interest payments. But as the Post points out, think about the opportunity cost. Is tying up all that cash in one property the best use of your capital?
Right, and partnerships.
Good way to pool resources. Share the load. But, and the Post is absolutely right here, you need a rock-solid legal agreement. Who owns what? Who does what? How do you exit if needed? Get proper legal advice on that from the start.
That leads nicely into the legal side, often a big hurdle for foreign investors. What are the absolute must-knows about owning property in Thailand, according to the Post?
The fundamental thing the Post highlights is that foreigners generally can't own land directly. That's the big one.
So how do people do it?
The common ways mentioned are owning the building itself and then leasing the land it sits on. These leases are usually long-term, maybe 30 years, often with options to renew. The other route mentioned is setting up a Thai company, which can own land, but
Complicated.
very. As the Post stresses, lots of rules. Need Thai partners. Definitely need expert legal help. It's not a simple workaround.
And that's why the Post strongly recommends getting a good property lawyer in Thailand. Why is that so critical for you?
Absolutely critical. Cannot stress this enough. Your lawyer is your guide and protector, as the Post implies. They know Thai property law. They'll do the due diligence, checking titles, zoning. They'll explain all the contracts and basically make sure you're protected and understand what you're signing. It's an investment in security, really.
Okay, let's switch gears to actually making money. Maximizing rental returns. The Post talks about rental yield. How should you calculate that, and what do the numbers really mean?
So the basic idea the Post gives is annual rent divided by the property's value as a percentage. Simple enough. But the crucial bit, also mentioned, is calculating the net yield.
Meaning after costs.
Exactly. You have to subtract management fees, maintenance, taxes, all that stuff. The gross yield might look great, but the net yield tells you what you're actually pocketing. And remember, as noted, different property types and locations will give different yields.
We keep coming back to location. What specific location factors really move the needle on rental returns?
Well, the Post correctly flags things like being close to the beach, obviously, but also transport links, nearby shops, restaurants, the convenience factor.
Does the general vibe matter too?
Hugely. The overall appeal of the area. Properties in desirable, easy-to-access spots usually get higher rents and stay occupied more often.
The Post also gives tips for successful rentals, presentation, marketing. What are the essentials you need to focus on?
First impressions count, as the Post outlines. Keep the place clean, well-maintained, maybe nicely furnished. Good photos are essential for online listings, professional ones, if possible.
Where should you advertise?
Use the big online platforms, definitely. Maybe also work with a local rental agent. Price it competitively based on what similar places are asking. And finally, just good communication with your tenants, being responsive helps a lot.
Okay, last section, the future outlook. What does the blog post see coming down the track for the Krabi market? Trends, tourism impact, maybe new hotspots. What should you take away?
The Post flags a few interesting things. That continued interest in eco-friendly building, maybe more smart home tech integration, that suggests what future buyers or renters might be looking for.
And tourism.
Continued growth seems likely, which is good for rental demand. But the type of tourist matters. Is Krabi attracting more high spenders? That could boost luxury rentals. The Post also points to maybe some emerging areas, Klong Wong for upscale, Tubkik Beach for luxury, even Railay West for boutique hotels. These might offer better value now with potential for growth.
So maybe look beyond the obvious spots.
Potentially, yeah. But the Post adds a crucial caveat. Property markets always have ups and downs, economic shifts, government policy changes. It all has an impact. So ongoing research and getting professional advice remain key.
So wrapping this up, investing in Railay Beach property, it definitely seems like there are some compelling opportunities there. Beautiful place, lots of tourists.
Yeah, and as this analysis from Ocean Worldwide suggests, drawing on their experience in nearby luxury markets like Phuket, there's a real variety of property types, something to potentially suit different investment aims and budgets.
But the big takeaway for you, our listener, has to be do your homework. Understand the legal side, research the market thoroughly, stay informed, don't jump in blind.
Absolutely. Informed caution is the name of the game. And maybe a final thought to leave you with, picking up on that trend, as more people around the world seek out these unique, slightly off-the-beaten-path destinations like Railay, how might that growing interest, and especially if it's combined with a real focus on sustainable development, shape its investment future? And how could sustainability actually help preserve the very value people are seeking there? Something to ponder, definitely.